Hello and welcome to the next of our full course lectures. This lecture is on ethics. Now we're going to look in more detail at some ethical theories, etc. in the later parts of this course, but in this lecture we're going to look in particular at the ethical principles behind the ACCA's Code of Ethics. So that's what we're concerned with here. We're concerned with the ethical code. Now, the first thing to note is that the ethical code that the ACCA provides is based on principles, not rules. So again, it's thinking a little bit like the corporate governance codes, where principles are easier to apply to different areas. So that's why we have a code with principles rather than rules. Now, this code is set out by IFAC, the International Federation of Accountants, and then it's applied by each of the accounting bodies. So the set of principles are, first of all, the 5 ethical principles. So the first of the 5 ethical principles is integrity. So that means that the accountant should act with integrity at all times. So integrity, it's difficult sometimes to think of a definition of these things. So integrity I want you to think of as acting in a straightforward and honest manner. So the first principle is to act with integrity, and that's to act in a straightforward and honest manner. So how could that come up? Well, you could either be asked to discuss integrity, or you could be asked to see where potentially the integrity of someone in a scenario was breached. So that's what we're thinking about here. How can we apply these to a scenario? The second principle is objectivity. So that means that the accountant should not act with bias. So there shouldn't be bias towards one party or another. And there should be no conflict of interest. So we'll be looking at some different areas where some of these could come up. And we don't want to see a state where we have an accountant who has a conflict of interest, perhaps taking a bribe or something like that. Also, we don't want to have any undue influence. Again, maybe that could be an inducement or pressure to do something. So the accountant should always act with objectivity, which means no bias, no conflict of interest, and no undue influence. The next of the ethical principles is to act with professional competence and due care. So professional competence and due care we could split down into 2 different parts. The due care bit is to act with diligence at all times. So no matter what work that an accountant is carrying out, they should do it in a diligent manner. They should give the time required to do it and put enough effort in that it's done correctly. When it comes to professional competence, well, that's continuing professional development, i.e. keeping up to date with current happenings, making sure that you know how to carry out your job as it should be carried out. So professional competence and due care is very important to the accountant. Next, we have our confidentiality. Very important that the accountant maintains confidentiality. There are some times, however, where the accountant may reveal the information. So that would be if there was, for example, a professional duty to do so. That might come if there was money laundering regulations, for example. So if you thought that a client was laundering money, you would have to reveal that information to the authorities, and that would override the confidentiality requirement. Also, if you discover something that you feel is in the public interest, well then that will override the confidentiality issues as well. The public interest would be something that's maybe damaging to the public, a fraud in a public body, that sort of thing. Something that the accountant becomes aware of and feels that the public should know about. Aside from that, confidentiality must be maintained at all times and is a really core part of an accountant's ethical requirements. So we've got 4 so far. We've got integrity, objectivity, professional competence and due care, and we've got confidentiality. We now have the last one, which is professional behaviour. Now, professional behaviour is really a catch-all. What that means is that the accountant should not do anything that could bring the ACCA into disrepute. So that covers a lot of different areas. And really, as we say, it's a principle, and it says, well, look, you shouldn't do anything that could or could be perceived to bring the ACCA into disrepute. So you need, for the purposes of this exam, to know all 5 of those principles and be able to discuss them. They're very important, they come up very often, and you need to know them. So you need to know the 5 principles. You also need to know the 5 ethical threats. So the 5 ethical threats are things that could come up that could mean that the principles are breached. So again, we'll be looking in a scenario to say, well, what are the threats that we can see in this scenario? So the ethical threats will be, first of all, self-review. So self-review is where you're reviewing your own work, and then you perhaps have a tendency not to want to reveal any mistakes that have been made. For example, if you were a member of an internal audit team and you are auditing the same area each year, you audit the purchases area of the business. You go in after the 3rd or 4th year and find that there's a mistake, but that's a mistake you should have picked up in the 1st or 2nd year. Well, it may be that you would be tempted to cover that mistake up. So to avoid that, we should have a different person auditing the purchases each and every year. It shouldn't be the same person. So that would be self-review, and that would be an ethical threat. The next ethical threat is familiarity. So again, this is becoming too familiar with people in an organisation. So again, perhaps thinking this time from the external auditor's point of view. Perhaps the auditor has been auditing the same business for several years, maybe 10 years. They may therefore get to know the management team. They may trust the management team. They may even trust them more than they should. So number one, they may be reluctant to report anything when they find it because they know and like the management team. But number two, they may be less likely to believe that the management team would do something that was untoward simply because they know them too well. They've become too familiar with them. To avoid that threat, for example, audit firms, if we have a listed client, must rotate the audit partner every 5 years. And that avoids familiarity between the auditor and the client. But again, familiarity can happen in the workplace as well. You become too familiar with them, you trust them too much, and maybe you're willing to overlook something. And we need to be alive to that ethical threat. Advocacy is where we have an accountant or an auditor who is speaking on behalf of a client or being an advocate. Now this is a little bit more tricky when you're an accountant working in a business because you do tend to be putting forward that business's point of view. But it's a particular problem when you are an auditor. An auditor should not be seen to be putting forward a company's point of view, i.e. acting on behalf of the customer, putting the client's interests out there and speaking on behalf of that client. That could arise perhaps in a tax investigation where you maybe speak on behalf of the client. That shouldn't really happen as an auditor. So advocacy, remember, that would breach our objectivity principle. Our objectivity principle says we shouldn't act with bias. Well, if we're speaking on behalf of the client, well then that would be acting with bias. Also, we have intimidation. Now, this can be thought of in many different ways. It could simply be intimidation, as in you may lose your job if you didn't do what someone was telling you to do. From an audit perspective, it may be that you would lose the audit client if you didn't give a clean audit report. So intimidation can take many forms. If the accountant is intimidated, they may well do or say things that they shouldn't do. So we need to be alive again to that ethical threat. The last ethical threat is self-interest. So this is acting where we have a financial interest. So that might be from an audit in business point of view or an accountant in business point of view where you maybe accept an inducement. So if you accepted money to do something, that would be a self-interest. It could even be that your family owns some shares in the business and you don't want to see it perform badly and maybe manipulate the accounts on that basis. From an audit perspective, it may be that the auditor had some shares in a company. And to avoid that, it's simply not allowed that the auditor has shares in a company that they then audit. That would be a clear self-interest threat. So what we need to do is we need to learn those threats, so that's self-review, familiarity, advocacy, intimidation and self-interest. You need to be able to discuss them in the exam, and you need to be able to apply them to a scenario. You need to be able to take that scenario and say, well, this is a self-interest threat, this is an intimidation threat, and then suggest what they should do about it, which we'll look at in a second. So you need to learn the 5 ethical principles, and you need to learn the 5 ethical threats. So what safeguards are there available to us to try to prevent these ethical threats from causing an ethical problem? Well, there are certain safeguards by the profession, so by the accountancy profession, to try to ensure that the ethical code is adhered to and that these ethical threats don't overcome us. So we have, first of all, the entry exams. So simply by taking the entry exams, you become aware of all of this. That's why we're learning it now. So by having those entry exams, the profession ensures that everyone who enters that profession is aware of the ethics involved. We also already have mentioned our continuing professional development. So we need to continue to learn, to keep up to date, and that ensures that we act with competence at all times. The corporate governance codes that we've discussed up to this point, again, these will come into play, and these will ensure that ethical standards are adhered to within a business. And lastly, the accounting standards. So application of the accounting standards will lead to less fraud and error and will ensure that the ethical standards are not breached. So those are some safeguards that we can be aware of in the profession itself. In your own workplace, you may find that there are certain safeguards. For example, your employer may well have a code of conduct that you need to comply with, or indeed they may well have their own ethical code. If they do, well then that means that those ethical codes will be adhered to in the workplace, or should be. Also, the internal controls that we've looked at in previous lectures, well, they seek to ensure that employees act in an ethical manner also. When it comes to the individual, well, again, we need to focus on our continuing professional development, and that ensures that we keep up to date and we're competent to carry out the work that we're seeking to do. So let's say we have looked at a scenario, or indeed we're in the workplace, and we find that there is an ethical problem. So there's a potential breach of the ethical principles, or we've noticed that there's an ethical threat. What can we actually do about that? And how can we approach this in an exam scenario? Well, the first thing to do is to gather the facts, really get an idea of what has happened. So read carefully so that there's nothing you're misunderstanding. Often these ethical threats won't be as bad as you thought, but you need to assess the facts to make sure of that. And if there is an ethical problem, then you need to deal with it. So we need to then establish the ethical issues. So we need to look at the 5 ethical principles, and then we refer to those to say, well, look, this is a problem with integrity. This is a problem with objectivity, or this is a problem with our professional behaviour. So refer to the fundamental principles and see if there's any potential breach of those principles. Again, check the scenario, or if you're in your own workplace, look at your own internal procedures to see if there's any way that's set out to deal with these ethical issues, and then follow those procedures. And also see if there are any alternative courses of action. So there are various safeguards that we can put in place to try to reduce the ethical threats, to try to ensure that the ethical principles aren't breached. So assess those alternative courses of action to see if there's any that you could undertake to try to avoid the ethical problem. You may also want to consult within your firm to see if there's anyone there that can give you some advice, or indeed take legal advice on the matter. Ultimately, it may be the case that you need to withdraw. If that was an audit firm, they may not be able to undertake the assurance engagement. If it's someone in the workplace, well, they may simply feel that their position is untenable, that they're being asked to act in a way that is not in conjunction with the ethical codes. And if that's the case, sometimes we're left with no option but to actually withdraw from the situation and leave that area. So that's how we can deal with the ethical threats. Let's just have a look at some specifics that may well come up. So how do we manage the threats? Looking at some specifics, let's say we have a conflict of interest. So if we look at a scenario and we see there's a conflict of interest, for example, the employer has something that they want us to do and that we feel is in conflict with the code of ethics. For example, asking you to take some sort of illegal action. Well, if that's the case, well then there are several safeguards that you can employ. First of all, perhaps discuss the situation with the ACCA. So contact the ACCA, discuss it, see if there's anything that they suggest that you can do to try to avoid it or indeed to deal with the situation. You may also want to take legal advice if you feel that it is something that's illegal, or ultimately you may not be able to stay in the situation. What about a situation where we feel we have a lack of knowledge? So again, we know from our professional ethics, from our principles, that we must act in a way that is keeping up our continuing professional development. That means that we need to act with professional competence. Well, if we simply don't have the knowledge, well then we may have a problem in acting with professional competence. So remember that we must act honestly. So that's the core here. We can't not explain or deal with this problem. So the safeguards we could have is to undertake some training or continuing professional development, or indeed to ask for assistance on the matter. So we may go to our senior manager and say we don't have the knowledge to undertake this and ask for assistance. What about if we have pressure from management? This will often happen in a work situation. So this may be pressure to undertake false reporting, something that we know will be in direct contradiction with the ethical principles, particularly thinking about integrity here. Well, the safeguards will be that there should be a whistleblowing function within the firm, perhaps through the audit committee. So we could maybe employ that to explain what has happened and to make sure that we don't have to undertake false reporting. Again, we could discuss it with the ACCA and ask indeed for legal advice, but we cannot undertake false reporting under any circumstances. So again, if there was no other solution, we would have to withdraw. We mentioned inducements in the lecture. Remember, we wouldn't be in a position to undertake any inducements. So this could take the form of gifts or hospitality, particularly where they are seeking to persuade you to do something. If they were small, trivial gifts, or maybe meeting someone for a drink, that's not perhaps a problem. But we're thinking here about large gifts or hospitality. I think the main safeguard here is not to accept such things. So simply don't accept them. And again, perhaps you'd want to take legal advice on the matter. What about this confidentiality we talked about? Well, confidentiality overrides almost anything. So always maintain your confidentiality. The only exceptions to that where we have a legal requirement, perhaps where there's money laundering, drug trafficking, something like that, or indeed where it's in the public interest to reveal the information. Lastly, of course, if you're given permission to reveal the information, then that would be okay. So those are examples of some areas that could come up in scenarios and how to think about dealing with them, suggestions that you could make. So let's look at an illustration on this. Read through the scenario that you're provided with here. Indeed, maybe have a go at the illustration and then work through the answer with me. In illustration 1, we have 2 requirements. The first requirement is to briefly describe the 5 types of ethical threats in the IFAC Code of Professional Ethics and discuss how accepting excessive gifts or hospitality can give rise to some of these threats within this case. So we're going to look at the 5 threats first of all, and then we're going to think about in detail the gifts or hospitality and try and apply those to the different threats that we can see. So the 5 threats are, first of all, self-interest threats. Remember, these may occur as a result of the financial or other interests of a professional accountant or of an immediate family member. So from, remember, an audit point of view, the auditor wouldn't be allowed to hold shares in a company he was auditing. Or it may be that if you're an accountant in business, you wouldn't want your immediate family members to have shares in that business. The next one was a self-review threat. Remember, this occurs when a previous judgment needs to be re-evaluated by the professional accountant responsible for that judgment, i.e. you've done some work and you're now reviewing it, so you shouldn't be in that situation. Advocacy threats, remember, these occur when a professional accountant promotes a position, so speaks on behalf, or gives an opinion to the point that subsequent objectivity may be compromised. So you're speaking on behalf of perhaps a client. Familiarity threats may occur because of a close relationship where a professional accountant becomes too sympathetic to the interests of others. And the last of the 5 threats, remember, was intimidation, which occurs when a professional accountant may be deterred from acting objectively by threats, and those may be actual threats or perceived. So those are the 5 ethical threats. So we're also asked to see what this one creates in the scenario. So this time we have a self-interest threat here, because in this situation we have basically a bribe, okay? So this bribe or inducement is being paid, and that is clearly going to create a self-interest threat. So that's one where a person's interests obscures objectivity. So their own interests obscures their objectivity and the need to act with integrity. So clearly the promise of a personal gain can be a threat to ethical behaviour, especially if, as in the case of Anne, it's a large amount of money and we're told that she is in financial difficulties. So the fact that she's offered this money may well compromise her integrity. An intimidation threat also can arise here when the party who is given the inducement seeks to exercise power over the recipient in the belief that further advantage can be taken. So for example, in the case of a bribe, the recipient can be induced to take further unethical actions. So once you've paid a bribe to someone, you're going to expect them to do more for you, with the threat that the first bribe will be exposed if they do not comply. So in this situation, Anne may be induced to award other contracts to the contractor simply because she's already accepted a bribe and they would reveal that. And that could be acting against the interests of both the company, its shareholders, and other contract providers who perhaps could do a better job. There may also be an advocacy threat in addition to the self-interest and intimidation. This occurs when objectivity is impaired because of their advocacy for a certain interest, be that a client, a bidder, a person. In this case, the fact that Anne awarded the contract seemingly on the basis of a bribe means she will have to defend or be an advocate for the successful bidder. And that might be against her own management team if the contract perhaps didn't go so well. Now, in doing that, she may well be acting against the interests of both her employer and the company's shareholders. So she's awarded this contract seemingly simply on the behalf of the contractor because of the inducement, and that's clearly going to encourage her to speak on behalf of that contractor, and that's a clear advocacy threat. Moving on then to the second of the requirements in this question. Well, we're required in this one to criticise Anne Khoo's beliefs and behaviour. So explain also why accepting the 50,000 conflicts with her duty to uphold the public interest. So we need to look at her behaviour and criticise it, and then explain why it's not in the public interest. So the criticisms of her behaviour would be, first of all, she didn't allow the contract to be bid for by all of the competing parties equally. So that's a failure of her duty to the public interest, to her employer, and as an accountant to her professional body, because she should have let all of the competing parties have an equal chance to get that contract. Her employers and other stakeholders expect to gain best value for money, and that requires a fair tendering process, giving all of the potential contractors an equal chance of winning the contract, which clearly she didn't do in this instance. The second thing we can see here is she's accepted a bribe to award the contract, and that completely undermines the contract bidding system and offers poor value to the organisation's principles, which in the case of a public company are to the shareholders. So the shareholders are the principals, we're offering them poor value. That's not what we're there for. Thirdly, Anne has exposed herself to ethical threats that may result in more unethical behaviour in the future. Remember, we said once you've accepted a bribe, there may well be a pressure to accept more or to do more for the contractor. So safeguards are put in place to ensure that ethical threats are not incurred, and her family's personal misfortune is of no direct concern to her employers and shouldn't have had any bearing on her management of the contract process. So she's bowed to that pressure, taken a bribe, but it shouldn't have formed any part of her decision. The fourth one here is that her belief that she deserves a higher personal return suggests that she's taking more than just the career opportunities that come with being a qualified accountant. So she wants to seek out more opportunities. She wants to take advantage of being an accountant, and that's not what she's there for. That's not acting in the interests of the profession. So that would be a breach of professional behaviour. So just thinking about this public interest that we're asked to consider, we could say that Anne Koo owes that duty of care to the public interest, as well as an accountant and as a company director. So she's an accountant, she's a professional person, so she owes that duty of public interest because of that, and she's a company director. Again, that suggests that she owes the public an interest. And this means that her duty to behave in such a way as to maximise the public good and not act in terms of pursuing personal interests only. So she shouldn't be just acting in her own interests. She'd be thinking about the public good. She should be thinking about their profession and making sure that she acts in an ethical manner. So that was our lecture on the ethical principles. So you need to learn the 5 ethical principles, learn the 5 ethical threats, and make sure you can apply them to any given scenario.